Welcome to the Edge Up Podcast with your hosts Reed and Glenn from Hawaii Trading Academy.
How are you approaching the market right now, Glenn? Is your strategy changing, or is it you're just waiting for the opportunity? Are you cash heavy? Like, what's up? What's Glenn's strategy?
Dude, I'm just sitting waiting, man. Lock and loaded. I'm
Are
just
you
letting the
freaked
market.
out that we were in a bearish market, man? Like jobs laying people off? Like, should I be worried?
For me personally, I'm not frightened or fearful of the news. The news is gonna be the news. That's their business. The news is once you understand that, guys, okay, then you can go ahead and block out the noise. Essentially, you block out the noise, and people are still spending, right? Consumer spending is up, businesses are spending money. You have to find that information yourself. I've just finished a 3-day conference, a business conference, and these guys are very successful, and they are. Mark Wahlberg said he gave advice for this year. He's like, guys, roll up your sleeves. Let's get to work. That's what he said. So that means to me, it's not a time to be sitting back and trying to protect what you have. The economies continue to go and grow. The different sectors are, of course, they're going to be affected, but I feel like change will be inevitably coming. So you got to figure out where, as far as putting your money, ultimate number one is always invest in yourself, right? It's been repeated, it's been said, but until you start doing so, guys, you don't even need to worry about the bitcoins or crypto, the NFTs. If you're putting more money towards that rather than spending on you, then there's something you might have to pay attention to and correct, right? But as far as me, my personal strategy, it's a matter of just a waiting game, guys. Like, if it's not a valid entry or a setup, I'm not in it. There are other markets that will be moving, and this is a pro of the trend following or swing trading type of approach. You can just see, okay, commodities moving, gold's moving, crypto's moving, wheat, forex is moving. Go ahead and figure out how to trade them. Don't get
So
caught up.
if the market is moving, bro, like, sorry to interrupt you, but if the market is moving and you're like, oh, here's an opportunity, I'm gonna jump in on the move.
Yeah.
You get curious and like, hey, what made this move happen? You're not there looking for like, okay, this move is gonna happen. I need to be at the charts. I gotta be ready for this. For example, maybe a CPI announcement's coming out. Like, hey, dude, I gotta be at the chart. Sorry, babe, no photo shoots today. Like, how do you approach that? You're just approaching it from an opportunistic point of view.
Well, at the end of the day, you develop a strategy, your system, right? And your system's going to tell you when to enter the market. If you include see announcements and news into your system, then yeah, you got to consider that. But if you're zoomed out on a daily chart and you're looking at the CPI days, it's a blip. The market's still continuing in a certain direction, whether it be up or down. And you want to be with the overall direction, if that makes
Yeah,
sense, bro.
that's more of a higher time frame point of view versus like a scalping or day trading point of view. Because I mean,
Yeah.
we could see bearish runs, bullish move runs within the same day.
Right. We just talked about having the different market or mental cycles in these markets, and like, go ahead if you want to capture those the quicker moves, go for it. But that means you got to understand what you have to go through in order to take advantage of those moves, meaning you're going to have to spend more time on the screen to get those moves. You might not capture the big of a move, um, and it may not agree with the overall trend direction. You know what I mean? If you're counter trend trading for that day because of the CPI or whatever, that's fine. You can do that, but you have to know that going into it, and then you just make adjustments um, for that particular trade or that approach. How are you, bruh? Like, what what's on your radar
Oh
right now?
yeah.
You've been
No,
very
I just
patient.
I'm like yeah, I'm with you. I'm just being patient. I'm just waiting for the right opportunities to present itself. I'm not really focused on fundamental news announcements. However, I will stay out of the market. I won't be looking for trades if I know an announcement's coming up. So I like to be updated with like the calendar and just to see, okay, may expect volatility on the US markets on, the 14th or something because of CPI. So like I'll take that into consideration, or NFP and employment claims interest rate hikes. Now it's like 4 or 5 that I pay attention to. Before it used to just be NFP,
Right.
but now it's like a lot of these, I want to say medium to high level impact news is really impacting the at least the intraday levels. So I mean, I will take note of that, but it's not going to keep me away from the market. Maybe if I'm in a trade, I'm also going to lower my risk. I'm going to remove or scale out of a position if I know like a movement is coming, or if it's a perfect setup and I know like, okay, in 3 hours there's an announcement coming, but the movement is happening now, the opportunity is now. Again, I'll go like half risk or a quarter of a percent of a risk, just reduce risk overall. Like that's the name of the game. I'm not trying to make money. I'm trying to risk the least amount but make a good profit on those opportunities. So that's where I'm sitting at, man. That's how I'm looking at the current market phase, fundamental. Like I'm not looking at all these unemployment. I think Steve Burns even tweeted like it's a bullish sign when companies are laying off workers, because where else that all that extra money going to go? It's going to go into developing technologies to combat the workforce. So I mean, like we're seeing a lot of development with AI, and I think that's going to be the next step in a lot of companies and a lot of trading. It's going to affect trading for sure.
Yeah.
Maybe not necessarily AI trading, but just the reflection of our economy on the stock market because of AI.
No, absolutely. And I think I remember reading, like, for example, Google, they laid off a bunch of people, but no one's talking about how much people they hired during 20 the
Oh
COVID and all
yeah.
that. So they hired way more people and they're keeping compared to the people that they're laying off. Maybe it's the TikTokers they're laying off. I hope so. But going back to your point of view, you, you mean it's a great point of being a risk manager, uh, as a priority. But like, is there any point when you start to get on the gas and start, like, how do you start going full size, and if not leveraging?
Yeah, that's based on the grade of the trade.
Yeah. So like A
The
plus, A
higher
plus has
probably,
to be, then you're going
if it's an
full
A
stop.
trade, a high probability it's full 1%. Yeah. And then I think even with prop firms, you gotta certain prop firms you have to reach a certain profit target in a certain time. So I think FTMO was one of them. And so like you definitely need to step on the gas during those times, maybe 2 or 3% risk just to achieve that target and then lay off, come back to risk management,
Yeah. Yeah.
prioritizing that
So
capital preservation.
go it, you know it has to be a set, I mean, like a high probability setup, so based on your data, and then also confidence, does that have a role?
I would say so. Yeah,
Yeah.
absolutely. Confidence in the plan and in the setup. Yeah, absolutely. That plays a
Like,
part.
and then news announcements, can that add more confidence or take away confidence when
Take
there's,
away confidence just because it's uncertain, right?
yeah.
It's an uncertain probability of the market. The market's always going to be uncertain. So I think the way I would adjust for that is to reduce risk. I'm not gonna,
Mm.
oh shoot, something's coming up. Like let's double down on this guy. No, let's double back first,
Double
and
back.
then come back. We could come back on the retest.
I like that. I like that. Yeah, I mean, I think it goes back to when you figure out your approach to the market. It's finding your niche. Goes back to what style, what fits your personality, right? With the trading style approach. And then does that trading style take into consideration all these news, announcements, current events, fundamentals, right? If it doesn't, if you're strictly technical or strictly chart price driven, then, you know, I've, for me, like that could be considered just noise, all the other things, because I'm looking at is price. And there's lots of books there. And of course you got to take it to consideration, oh, okay, COVID was there, that has a big fundamental major thing where it affected businesses. Businesses couldn't do business. A big chunk of the world was shut down. So yes, okay, it's not wise to go put in a full position, you know, because I got a breakout to go long, but really there's no planes in the air and this and that. So that, I think, to me, that's a point where you do have to take the fundamentals into consideration compared to just being a strictly price driven thing. And then, yeah, people will counter that, but like that was my approach and my point of view during this, I one moment in time in history.
Yeah, and that could be falling under uncertainty in the market.
Yeah, I mean, I think at the end of the day, you stick to your guns, stick to your system, stick to your data, stick to your personality, your trading, and I think you should be well. You should sleep better at night.
To summarize your thoughts on the current economy, it's just like, don't worry, just place price action, right? Follow price action. That's it.
Follow your plan. You have to be confident in
I'd
your
imagine
plan.
that. I'd imagine for you that for just anyone listening, that's like a lot of stress relief
Yes.
because
Yeah.
it's like I'm looking at the news every single day, Glenn, and I'm like panicking because like I'm seeing all these layoffs. I got people telling me, "Oh, we're heading in a bear market. We're in a recession. What should I do with my money?" And the answer is just like, "Hey, that's all noise. Like, don't just pay attention to your plan. If you're a trader, yeah, pay attention to your trading plan. What is your edge saying?"
Yeah, yeah. It's there's different answers for different types of people. Sometimes the blunt answer is like, if you're so worried, then don't even trade.
Oh
It ain't
yeah,
for
there
you.
you go. That's one answer.
You
Yeah,
know?
that's a. If you're constant, well, what if I'm a fundamental trader and I always I have to look at the news in order to place the trades? Like I trade Pfizer, and I
Fine.
want to make sure I know what I'm. Or Raytheon, I trade Raytheon. I know that
Yeah.
we're going to war soon. Like, you know what I mean? Or I guess a debate there is like, hey, what if you're just looking for the opportunities? Like you're looking, okay, real life scenarios, maybe war is happening, right? And then as an investor, as a trader, you're looking, okay, if war is going to happen, or if
Yeah.
something drastic happens in a certain sector, we could go off COVID, easy.
Yeah.
COVID, you're going to look at the medical side of things, like stocks specifically, or funds that trade the medical devices, and then you're going to capitalize on that. So I guess that's kind of good in a way of knowing like what's going on. I can't just follow price all the way up to there. I mean, that leads to what is it called, like conviction and confidence in knowing that, hey, look, I want to go short or I want to go long on Pfizer just because this COVID thing is going around. I don't know how long it's going to go, but
Mhm.
my plan is showing an opportunity here, so I'm going to go long on it, right? Like that's essentially how you're handling all the fundamentals that the news would put out, right?
Yeah, absolutely. Absolutely. It's like it has to make sense to you. If it's a product that you never trade at all, you better have a valid reason why you're going to get into that market, right? Like if you don't trade stocks, but all of a sudden you got your eyes on stocks because of where what happened in 2020, then you gotta have a solid plan, and you have to know when you're either gonna get out for exit or a loss, or get out for a profit. You have to understand those simple key things, and there's so many different distractions I've seen, especially social media, guys. A lot of people, when you're reaching in an uncertain market environment, well, what do a lot of people do? They try to seek approval or agreement with others, right? They form a thesis, right? And they go ahead and do that. What happened to the Reddit guys, the Wall Street bets with GameStop, right? There's that one guy, he just started to pull up his analysis, his thesis on this one GameStop trade. And sure enough, he did this time, he put the due diligence, he did the work, and he put it up on there, and then people just went to bonkers on it. They just piggyback off of that particular trade. Now, what I'm saying nowadays, it's hard. A lot of people want to feel right, feel like they made the right decision compared to actually making the decision based on their to their system in order to be a good trade. You know what I mean? What it takes to have a good trade. People rather focus on being right than rather than focus on making a good trade, whether that be a win or loss. If you did you agree on that? Like society nowadays, man?
Yeah, yeah. It's like people want to be right more than being wrong,
Yeah.
but it's also I always refer to the or think of the book One Good Trade by Mike Villafleur, and like that's just it doesn't matter. It was it a good trade, but you lost, then it was a good trade. Like it doesn't the outcome doesn't matter so as much as you executing the plan. That's what matters, right? To the T. And I think yeah, coming back to this whole fundamental analysis, what's going on with the news, what's going on with social media, it's all noise, it's all distraction, and we just have to stick to what we know, what our plan is, stick to the edge.
Yeah.
And I wouldn't say no to opportunities in other markets because I think we discussed like if you have a trading system, it should be a robust trading system should be applicable in all types of markets and all types of market conditions. And so like that means we could take what we're trading with forex and apply it to the stock market. And so like and I mean of course there could be some minor tweaks because the markets do move differently, but just small tweaks. Maybe it's like using a wider stop. Like for Bitcoin, for example, I've learned that I have to use a wider stop when I'm trading through my prop firm just because you get wicked out a lot faster. So I mean that's just one aspect of that type of that trade that goes on. And I think just coming back, there's no fear. Like it doesn't matter what people are saying about Bitcoin right now. Am I going to dollar cost average? Am I going to is there's if there are day trading opportunities, I'm going to take the one wins and get out of the market real fast. So um, yeah, I think we're essentially we're on the same boat. I probably pay attention to a little bit more fundamentals now that I'm like intraday trading,
Yeah.
but at the same time, it's not gonna prevent me completely from either me losing a whole lot of the account or just staying out of the market or risking less. So
No.
yeah, I mean, it just comes down. So that's the final verdict. I think is that we have no concern about how many how many companies are laying off employees and how many or how our economy is doing right now. As long as we could trade, the economy is good. That could be a little
Absolutely.
selfish.
I mean, okay, just to bring another example, right? 2022 was was a bear market, right? We were down 16, I don't know, almost about 20%
Yeah, I
on the
think
Nasdaq.
16% for S&P. Yeah.
S&P, okay, right? So a lot of mutual funds or the normal hedge funds, they had a bad year. I just read that Citadel, freaking solid year, solid year. They made billions in profit. And that to me was that to I know for sure they just stuck to their guns, their systems, they perform and executed. And that was the result, you know. I know they got a solid team. They have way more resources than we do or the average person, of course. But what are they do like in that kind of market, in a bear market, people made money, you know, and that to me shows that okay, that opportunity is still there. You don't have to have a picture perfect market. If a picture perfect market is happening, everyone's going to make money, obviously. But when you have a solid system, a robust system, as Reed mentioned, you should be able to perform in all types of market environments. You'll have a losing um year, but if you because you stuck to your system, you probably lost less, you save money, right? Opportunity should be right around the corner for you, you know? Um, so I think just looking at these bigger guys and seeing that it's still possible, the possibility is there. You know, there's a lots of trend following funds out there. They showed January last year as a solid year, lots of gains, double digit gains, and then they started off January with a solid year. I think it was Melvin Capital. They posted 6% last in January. You know, so
Very
um,
nice.
yeah, I mean, solid double digit year. Then it led started this year with a bang. So for me, that was confirmation. Like, okay, strategy, stick to have that solid, sound strategy, whatever you may trade, stick to your data, stick to your guns, and then if as long as we're able to, as long as the internet's out there, as long as we can have the login to our brokers, as long as we can execute trades and get in and out, we're good, guys. We're good.
So I googled the quick Google search for S&P return for 2022, and it says the S&P lost negative 19.44%. Its worst year since 2008. So it's a wild stat. Negative 19%. If you didn't have a negative 19% month on your portfolio or negative year on your portfolio, you did good.
You beat the market.
You
You beat
did
the market.
great. You beat the
Very,
market. You did great.
and this is
So
a cool thing that Kathy Woods was talking about how of ARC. She was just talking about how lots of traditional funds, hedge funds out there, they use S&P as a benchmark, and that's where they scale their performance to. And I love her insight where she's saying, "Why are you gonna just compare yourself to this standard benchmark? You're somewhat limiting, capping yourself on your potential. You know, Now, she could say it's hard. I mean, I'm just sharing what she has, her insight, because right now, her funds in a big downturn as well, but she has a different perspective and understand, like hearing that's really intriguing. And it just shows you the confidence that she has in her system, her research, her data with her team. And it's just showing that, like, yeah, she's gonna, whether or not her fund does great, do have great performance or recover, that's what traders are about, sticking it out, having a mental toughness, having a resiliency to stick it out even after 50 plus percent drawdown. And she manages a
I
lot of
think
money.
I like the S&P as a benchmark, right? It's like the standard. It's like the average male is this height or the average this. That's the average. Like if you could perform, you're better than average. And then that I think what's so cool is you could be, hey, I performed 20% in the year while the S&P lost 20%. And you show that to an investor or a prop firm, they're gonna be like, yo, take our money, trade for us. Now
Solid.
that's why that's good. But like I'm with Kathy. Like we shouldn't limit ourselves, but also it's a perfect benchmark. Everyone knows that benchmark. Of course we want to do better. Of course, like that's the goal. Of course it is, but like so S&P is a great benchmark because like if you're coming in new, like okay, what's a good return? Like people, I've googled that a lot. Like what's a good return per month? You know, and like anywhere from 2 to 5% is an amazing time return,
Right. I
right?
mean,
So I mean,
at this
on
point,
average,
even a 5% return, that's multiples above what your savings account's giving you.
oh, absolutely, yeah. I think the best I've heard. One of my friends said 5% annual
Really?
return. I don't know how. That's crazy, yeah, man. For treasury bills.
Oh,
So
okay. Yeah, yeah. That's not a like a traditional savings account. They have like the money
yeah,
market
no, not a
account.
just.
Yeah.
I think what would be the best savings account out there? It's probably 0.2%, or if
It,
even that,
yeah. They're in
0.02.
the decimals, man. When they're in the decimals, they're just robbing your money, man. They're holding it hostage, guys.
Yeah,
Because what do they do? What do
they're
the big
using your
banks
own
do?
money.
They take your
They
money
use your
and
money.
they lend it out to the wealthy who go ahead and purchase assets with it. Plain and simple,
Yep,
man.
exactly.
Yeah. So, current events, we're always going to have current events. We're always going to have news, guys. The questions you got to ask yourself is, how's my sister performing in this particular environment? Do I have data? Do I have historical research? If you don't have any of those yet, maybe that's a point to start in. Run some back tests. Lots of great technology out there to help you craft your trading approach to tra- um, go through these different market cycles. Because I encourage, like, if it's a bull market, everyone's gonna make money, right? Not everyone makes money in the bear market, and 2022 was a great example for it. But really put your trading system to the test, put it through these different choppy markets or highly volatile, low volatile markets. Put it through the test. You also got to put yourself through these tests too on how you're going to be performing through these different market environments, through and document it, journal, right? We're going to be beating that into your ears day in and out, as you continue to listen to this podcast, guys. But yeah, market, if you have a sound trading approach that it's robust and made for different environments, you should be okay, guys. If not more okay, you should either save money on the losses or you should come out profitable. So, any last words, bro?
Nah, just thanks for listening, everyone. Hope you enjoyed the podcast. Click the link below for more episodes. Aloha, everyone. Reading Glenn here from Hawaii Trading Academy. Thank you for listening to the podcast. This podcast, we go deep into Glenn's approach to fundamental analysis, why all the concern, like there's companies laying off workers and by the buttload. So should we be concerned? How should we take action in the markets? What is our trading strategy during these weird and volatile times with all kinds of stuff happening, UFOs, COVID, war? How do we approach the markets? Listen up. We go deep into this one. Thanks, all.
Whether you're looking to improve your trading mindset and growth, we'll provide you with the tools, tips, and inspiration you need to make your next breakthrough. So tune in and let's edge up together.